Okay. So we are in day 2. In the last session, we discussed about the programs which we are offering and the timings, duration, and primarily what are the applications we are going to learn from the program 1, which is an online program. We touch based a few relevant points. And as a day 2, what is the agenda for today? First, I'll take you through very high level from each application what we are going to learn. The second item is I'll walk through detailed course curriculum. The third item is let's try to understand what does it mean by Oracle Fusion Financials applications, or say Oracle Fusion Cloud Financials applications. We'll decode it. So that is the agenda for today. If time permits, we'll go beyond that and we'll keep some time for Q&A. Let's try to understand what is the purpose these applications can be used by any company. What is the purpose these applications can be used by any company? So if you talk about Oracle Fusion Accounts Payable application, the purpose of accounts payable, the short name is AP. We call it as AP, accounts payable. Don't try to understand beyond what we are discussing. We have time to understand. For now, just take some data points, be aware of those. Even if you are not understanding the complete information, no issues. My target is you should be familiar with the terminology, what we are going to use. That's it. Right? Don't.
Hello, sir. I'm sorry to stop you. I'm sorry. I missed yesterday's class, the demo class. I have one question. You might have discussed this, but I just wanted to ask before we start. This is Ravi. So I do have like 15 plus years of experience in QA world, and I'm trying to come out of that QA. So I just want to know, because you have given extensive coaching to so many people, will it work to learn this one for a guy who doesn't have a finance background?
Yes.
Will it work?
It works.
Okay. Okay.
Yeah.
I don't have experience as a functional guy, or as I don't have experience as
Even if you don't have that 15 years experience, whatever you claim, still it will work.
Okay.
Yeah.
Okay. Perfect. Thank you.
Yeah. Thanks. Let's proceed. So, accounts payable application. From this application, what we are going to learn, or say what company is going to do, right? What company is going to do, like how companies are going to use this application. Let's try to understand. The primary purpose of accounts payable is to make the payments. As a company, they buy something from the suppliers, or say from other organizations, and they have to make the payment. To make the payment, they need to get invoice from the supplier. It could be product or it could be service. They may buy the product, they may get service from other organization whom we call as vendor or supplier. For the same product or service what they are getting from the supplier, they have to make the payment. To process the payments, we use accounts payable application. If you want to make the payment, you need proof on what base you are making the payment. Whenever we buy something from the supplier, we get invoice from the supplier which says how much we have to pay. For that reason, in accounts payable application, we record invoice. Against that invoice, we process the payment. This is a primary function of accounts payable application. This is what primarily we will learn from accounts payable application. So by using accounts payable, we can create invoices and we can make the payment. What invoice is this? Purchase invoice. Purchase invoice. So we purchase, when you purchase, we get invoice from the supplier, and based on the due date, we make the payment. So invoice and payment. If you want to create invoice, that invoice should belongs to so-and-so supplier. So within the accounts payable application, along with invoice and payment, we have to maintain the supplier information. That we will discuss more detail level when we deal with accounts payables. For now, you can try to understand the key tasks, key activities, what we can perform within the accounts payable is invoice creation and payment creation. Those are the two stories we have to handle within the accounts payable. Let's talk about accounts receivable application. So within the account receivables, what we do and what is the short name for accounts receivable? AR, accounts receivable. Within the account receivable application, please go on mute. Please go on mute. One sec, I just mute participants upon entry. In between, it is the gap people were able to sound. Okay, fine. Please make sure you are on mute, please. So what we can do, or what companies can do within the accounts receivables application? If any company is using accounts receivable application, what information they can record within the receivables? As a company, you may sell something to the customers. You may provide services, or you may supply some goods to the customers. As an organization, when you sell something or when you provide some services to the customer, you have to send bill to the customer so that customer will make the payment. So you have to create bill. By using accounts receivable application, you can create the bill. That bill you can give to the customer. Whenever you receive the payment from customer, you create receipt, or you can say customer payment. You can call it as a bill, or you can call it as sales invoice. In payables, we are calling it as invoice, or you can call it as purchase invoice. You purchased and you got invoice. In receivables, you sold something and you are billing to customer. You can call it as bill, or you can call it as sales invoice. You can use any naming convention. So whenever we sell something, we have to give the invoice to customer. Whenever we get the payment from customer, that we have to record in receivables application as payment is received. That is nothing but receipt. When you receive the payment from customer, that we record as a receipt. And what we can do within the cash management application. Within the cash management application, primarily we maintain the bank accounts which are owned by company. If any company is going to use Oracle Fusion applications to maintain their business data, so whatever the bank accounts they have in their organizations, that information we can maintain within the cash management application. Say bank accounts. So primarily bank accounts we can maintain by using cash management application. When you have a bank accounts, you have to deal with your bank statements. That we will understand when we are working on cash management, but primary points we are discussing. So within the cash management, we maintain bank accounts. And fixed assets. For this, the short name is CM, or you can say CE also. Cash entry system, or cash management, or cash entry system. Why we use these two names, we will discuss soon. Okay. Fine. The next application is Oracle Fusion Fixed Assets. The short name for fixed assets is FA. So by using this application, what data company can maintain? By using fixed assets, company can maintain the company assets information. Assets. What kind of assets? Fixed assets. When you talk about fixed assets, say company buildings, the land, furniture, computers, machinery, plant, these sort of assets, information, whatever the assets are owned by company, all the information we maintain in the fixed assets, and always we will look into what is the current value of asset, how much value got decreased. The company will work on these aspects. Those we will see when we work on fixed assets application as a part of our program. For now, to understand very high level, the purpose of Oracle fixed assets application is to maintain company related assets. We maintain all company related assets. Now, there is another application called as Oracle Fusion Expense. When you are running the company, there could be expenses which are incurred by employees, not by company. We are not talking about company incurred some expense. If company is spending some expense, so that you have to record in accounts payable application. You spend some money, you spend some expense, you purchase some goods, or you taken some services, or you spend something, whatever it may be, you will get invoice and you have to pay. I'm not talking about what company is spending. The employees also can spend some expense, and that expenses they can reimburse from the company. Say for example, there could be some provision, there could be a policy in the company. Every month employee can claim 500 rupees for the stationery. That means company is giving the provision to the employees, you can spend 500 rupees for any kind of stationery related expenses that you can claim and you can get the reimbursement. Or say employees traveling from one location to another location on official work, or it could be some project related travel. So in that case, the employee will incur some expenses, employee will spend some expenses, company will say, you may spend from your pocket and you can submit the bills and we will reimburse that claim, will reimburse that expenses. In that case, employee will book all the expenses by using this application. Okay, by using the Oracle Fusion Expense. This application you can call as Oracle Fusion Expense Management. Okay, EXM. Oracle Fusion Expense Management. By using Oracle Fusion Expense Management, employees can book the expense what they are incurring, which can be reimbursed by company. If they are booking their personal expenses, those are not allowed to record in this application. Which expense employees can reimburse from the company related to their travels, other options or other provisions what they get from their employer, that expenses they can book in the form of expense report. They book the expense reports. Say they spent 1,000 rupees, they travel expense, company is ready to reimburse because the travel related to project related travel. So employee will log into this Fusion Expense Management application. They will create expense report. Within the expense report, clearly they will specify, I spent 1,000 rupees because of the project related travel. Yes, this amount company will pay to employee. And when you create invoice in the payables, when you create the bill or sales invoice in the receivables applications, there could be some tax component. You received invoice from your supplier, there could be tax, or you are billing to your customer, there could be tax, depending on the country. In few countries, no tax. In most of the countries, yes, tax is applicable. So depending on the country, for which country you are implementing, accordingly, this point is applicable. So you are implementing financials application for one of the client. Say you are implementing for one of the US client, yes, tax is applicable. So there, what we have to do is, whenever you create invoice in the payables, when you create sales invoice in the receivables application, tax need to be calculated. To calculate the tax based on the applicability, we do all the tax related setups within Oracle Fusion tax application. Within this application, what we do the tax setups. It's very simple. We'll go and set up. When you create invoice in the payables, how much tax is applicable. When you create the sales invoice in the receivables, how much tax is applicable. This is how you can do the setups based on that country or based on the business scenarios. You can do the setup. So within the Oracle Fusion tax application, we are not going to record the transactions. We record the transactions in accounts payable application and account receivables application. If you look at other applications you are not using for the business purpose. Bank accounts, it's your internal matter, right? How many bank accounts you have, those all you will maintain by using the cash management application. And fixed assets also internal. How many assets you have in your organization, those all assets you will maintain. And Fusion expense application, just to record the employee related expenses, that is internal. And tax, when you are creating invoices and bills or sales invoices within the payables and receivables, or say in AP and AR, when you record the transactions, what tax need to be calculated, how much percentage that need to be calculated, when tax need to be calculated, when tax should not be calculated. This all you can set up by using Fusion tax application. So the very, very powerful applications are two applications. Those are AP and AR. Okay, these two are very, very powerful applications. The core business transactions are recorded in AP and AR. AP to make the payments, AR to receive the payments. Before making the payment, you have to maintain the proof why you are making the payment, because your organization purchases something. For that reason, you got invoice. Against that invoice, you are making the payment. When you are receiving the payment from the customers, why you are receiving? Because we sold something. Where is the proof? The bill or sales invoice. We are selling to the customers. That is the reason we are receiving. So you have to learn all these applications, but your primary focus should be on accounts payables and account receivables. Again, if we talk about accounts payables and account receivables, which is a powerful application? Accounts payable, because with the accounts payable application only money will flow out from your organization. Very danger, right? Our money is going out. You have to be very, very careful. We should have many rules, policies, etc. So in every implementation, if you are implementing financials application, the key application will become AP application, accounts payable application, where we process the payments. Our money will go out. So there will be many, many rules which we have to implement. There are many conditions which we have to build in the system. It's pretty simple, but comparatively, I'm talking about, it is a powerful application. And every company, like they'll be more focusing on AP. When you talk about AR, no rules and all. If customers are interested to pay Yes, we are very happy to receive. Even we don't send invoice. If some customer is ready to pay, yes, we are ready to record receipt, but that won't happen. So when you are selling something, yes, based on the sales, what you are doing, you'll be getting the payment. But when you're making the payment, you have to careful. So when you are earning the money, yes, we are happy to earn, but when we are spending the money, we are not happy to spend. The same is applicable with respect to these applications. So out of all these applications, the primary applications are these accounts payables and account receivables, but still you have to focus on other applications. Now let's talk about what is the purpose of general ledger application. Okay, I'm taking that application here to make our example very easy. Now, I have invoices and payments within the accounts payable application. I want to create one report. How much we spent in so and so month. Yes, I can go to payables application. What purpose we spent? Maybe expense purpose or services purpose or some goods purpose. You purchase goods, you take in services, you spend some expense, right? So all these, how much amount you spent, how much you have to pay to your suppliers, whatever it may be, you want to understand, then you have to go to accounts payable. And you want to understand how much amount you paid in this month or last month, you have to go to accounts payable. And you want to understand how much customers has to pay to us. Yes, you have to go to receivables, you have to look into sales invoices so that you can understand how much customers should pay us. Or else you want to understand how much customers paid last month. You have to go to receivables, accounts receivable, AR or accounts receivable, or simply you can say receivables and payables also. This is how we use the terminology. Okay, you can pick APR or else accounts payable, account receivables. All the times accounts payables, account receivables, it will consume our energy, right? So simply you can say payables, receivables, or more shorter you can say AP and AR. So if you want to understand how much amount you received from your customers in the last month or current month, you have to go to AR, then you have to look into receivables, then you will understand. And if you want to understand how much balance is available across your bank accounts, you have to go to cash management application so that you can understand how much cash is available in those bank accounts. And if you want to understand how much value of assets you have, then you have to go to fixed assets application and you can look into the value of assets what we have. And if you want to understand how much expense you spent, right? See, we discussed expenses are recorded by employees within the expense management application, but ultimately the expense report related payments we process from accounts payable only. This all expense reports information will come to APU. From AP, we will make the payment. From AP, we will make the payment. That's how that would be routed. Okay, we cannot make the payments directly from expense application. Expense application purpose is just to record the expenses. The expense application purpose is just to record the expense reports in the form of expenses, in the form of report, expense report. That expense report, the expense department, the expense management department or team, they will submit to accounts payable because they don't have any right to process any payments to employees or suppliers. Anyway, suppliers related information, they are not going to record in the expense application. Only expense reports information, they record. That information they will submit to payables application. Then payables will process the payment. It could be invoice or it could be expense report. Ultimately, the payables is going to process the payment. Now, in Fusion tax, we are not going to record any transactions. This will facilitate tax calculation wherever tax is applicable. Where primarily tax is applicable? In payables and receivables. Yes, the Fusion tax application facilitate the setups That setups will help us to calculate the tax automatically whenever you create invoice in payables or bill in receivables application. And what is the purpose of Oracle Fusion General Ledger application? Just now we discussed in each application what we can do, and if you want to understand the relevant information, definitely you have to go to that application. Now my requirement is I want to understand how much revenue I received. When you do the sales, you will get revenue. How much expense I spent, total expense. It could be any expense, employees or you purchase goods or services, etc. Doesn't matter. All the expenses you can find from AP. Okay, expenses you can find from AP. And revenue information. When you do the sales, you will generate the revenue. The revenues you can find in the year. Now, if I look into this revenues and expense, I will get some clarity. Say, for example, revenues what I generated in the last month is 25 lakhs. I'm taking small figures to make our examples easy. Okay. So 25 lakhs. The revenue what we generated in our organization last month is 25 lakhs. And expense what we incurred, the total expense what we incurred, that is 21 lakhs. So we generated revenue 25 lakhs, we spent expense 21 lakhs. The variance is 4 lakhs. So this we call as net income. So we generated this much revenue, but we spent this much. This is kind of surplus, you can read. So if you want to prepare this kind of report, revenue minus expense, net income, this you can call as income statement. So if I want to create this kind of report, is it possible to create within AP? If I go to AP, I can get only this 20 lakhs expense information. If I go to AR, I can get this revenue information. Okay, the revenue information in the form of sales invoices. But the expense, if I want to create the income statement, I need expense as well as revenue information in one place. Or else, let's take another example. I want to create, okay, balance sheet. If you are not aware of this terminology, you no need to worry about it. Try to understand what we are discussing. That's it. Simple things. Still, you need some clarity. I'll tell you what to do. So balance sheet. Here, what items I need? I need asset information. I need liabilities information. Okay, liability side, yes, I'll be taking this net income. That's other story, not required for us now, just to complete this example. I want to prepare the balance sheet. This income statement balance sheet we call as financial reports. So I need assets information, I need liabilities information. Where I can have assets information? If I go to fixed assets, I can have assets information. Even if I go to receivables, whatever customers has to pay us, that you can call as assets, but current assets, whatever it may be, the assets information I have to collect from AR application and FA application. From these two applications, I have to collect assets information. From FA, fixed assets, from AR, current assets. And liability information I can collect from AP. In AP, all the invoices which are not yet paid, those are our liability. We have invoices which we received from suppliers but we not yet paid. That all we call as liability. That means we have to get information from AP. Now, if I want to create balance sheet, okay, the returned earnings, etc., I'm not taking, just for our understanding. To understand this point, we don't need to hook everything. This is enough. So if I want to prepare the balance sheet, I need information about what assets we have in our company. It may be fixed assets or current assets. Again, here another point, you will be taking assets from cash management also, right? You have a money in the bank accounts. That is also asset. It is not fixed asset. It's a current liquidity is there, current asset. So I have to take from here also. So from the different applications, we have to collect the data. Then only I can prepare this balance sheet. If I want to create the income statement, I have to pull the data from AP and AR. If I want to prepare the balance sheet, I should pull the data from AR, CM, FA as to pull the assets, and to get liabilities information, I have to pull the data from AP application. When you keep the data in the different applications, you cannot prepare this kind of reports, but we have to use these different applications to segregate and maintain the data based on the specific department related activities. The payables department will use accounts payable application in the company. The receivables department will use AR application. If there is a department called as treasury or cash related department, that department will use cash management application. The asset management department will use fixed assets application. If there is separate team who will look after employee expenses, that department will take care of this tax, expense application. For tax, there could be people who will look after the tax calculations, etc. And that's how every department we have a separate application, and every department is designed to perform the department specific activities. So this is what we have to understand. Okay. So each department is designed to perform the department specific activities. The payables department primary responsibility is recording invoices, processing payment. The receivables department primary responsibility is recording the sales invoices, or say creating the billing to the customer and collecting the payment. And cash or treasury department responsibility is maintaining the bank accounts, and they look after bank statements also. That we will see more detail level when we start working on cash management. The fixed assets department or asset management department responsibility is maintaining the fixed assets and calculating depreciation, etc., etc. That you learn when you work on the fixed assets. Expense management, there could be department or there may not be department. There could be few people who will look after this expense related stuff. So that department responsibility is recording the expense reports. They never make the payments. And there could be few people who will look after the taxation in the organization. So those guys will look after this tax setup related information. So this is how every department got different function. The function means the activities, the primary activities, what they do, that we call as a function. That's just a kind of technical term. The application point of view we call as function. So function means performing something. The payables primary function is creating invoice and payments. Receivables primary function is creating sales invoice and receipts. The cash management primary function is maintaining the bank accounts. And assets primary function is maintaining the fixed assets. Expense primary function is managing the expense reports. The tax, setting up what tax is applicable, when, where, how it is applicable. So this is how we are decentralizing the department specific information. We are not centralizing. Okay, we are decentralizing, means we are separating, we are segregating, so that the department will have a complete freedom to maintain that department specific information. Now, if you want to prepare this kind of financial reports, okay, you may just count, okay, cash flow statement also. Okay, how cash is flowing in and out, right? Cash flow means within an organization, how cash is flowing, how we are receiving the cash into organization, how we receive the cash into organization, primarily because of sales. When you sell, you get the money into organization. That is one reason. Other reason could be you might be taking the loans also, right? There could be some funding. Okay, there could be some funding. Different reasons. Okay, different reasons. But primarily, if you look at the core business, the primary reason would be you are receiving the money into organization because of your sales activity. Okay, because of your sales activities, you are getting the cash into your organization. You are selling, that is the reason money is coming into organization. That is a inflow we call. Okay, sales inflow. Or else there could be some loans. That is also inflow. Okay, loans. Or there could be some funding. You are receiving funding, right? You are getting some funding from external organizations to run your company or to expand your operations or presence. This is also inflow. So these are the different reasons why you get the funds into your organization. And what about outflow? Simple, you know very well. We make the payments to suppliers. When you make the payment, it's outflow. Whatever the money we have in our organization, it will flow out. Or else there could be another reason. You are making some investments. Or else you are funding to other companies. Here we take in the case some other company is funding. The company is giving some funds to us to expand our business or to expand our business operations, our presence, etc., etc. We are getting funds. In other way, you may invest, you may give funds to other companies. With that reason also money will go out. That is outflow of the cash. The company should have a complete insight. What are the reasons we are getting the money into organization? What are the reasons money is going out from the organization? That we call as cash flow statements, or you can call it as fund flow statement also. Cash flow means primary, it will focus on primarily cash is flowing because of your sales and payments. Apart from that, if you want to see broader manner, so your loans, funding, investments, and the other stories, if you want to include that, you can call as fund flow statements. It's a fund flow means beyond the cash flow. Cash flow primarily focus on the core business activities. The fund flow talks about core business plus other core activities which are becoming reason for your cash flows to flow in, to flow out the cash within the organization. So this you can say cash flow statement or fund flow statement. Don't try to understand more than what we are discussing. Okay, it's very simple. You from today, if you are not aware of this terminology, from today, if somebody will ask you, hey, what do you mean by income statement? Revenue minus expense we call as income statement. How do you get the revenue? When you sell, you get the revenue. Expense, when you spend, that will become expense. And what do you mean by balance sheet? Okay, balance sheet. In our organization, what are the items in the balance sheet? Let's say that is a question. What are the items in the balance sheet? Assets and liabilities are part of balance sheet. Your assets and liabilities should be equal. Okay. If it is 2 CR, this is also should be 2 CR. Okay. So if you have some assets, how come you have those assets, right? And again, here, when you talk about liabilities, it's not purely your assets will be equal to liabilities. From liability side only, we can say how much money you generated. your profits also, that ideally we call as retained earnings. The term what we use is retained earnings. Please don't turn on your cameras, etc., etc. Okay, not required. Please. Here, not only your liabilities, along with the liabilities, you have retained earnings. Just I am writing it as along with this RE. We'll understand, we'll talk about it. Retained earnings, how we'll get the revenue minus expense, you can say retained earnings also. The net income only you call as retained earnings, to understand very high level. So balance sheet talks about one side you will have all your assets, other side you will have a liability plus your profits, retained earnings, RE, retained earnings. When we get into our classes, once again we will talk about it. Once again we'll talk about it. So this is the point we have to understand. So when you talk about balance sheet, your assets and liabilities will be part of balance sheet along with the assets and liabilities. Liabilities side, these are the sides. Left side we have liabilities, right side we have assets. In some other countries, assets can be left side, liabilities can be right side. Doesn't make any difference. Those are the different formats. Okay, but ultimately what is inside of balance sheet we have to understand. We'll have assets one side, liabilities other side. Liability side only will have a retained earnings. Those are profits. Why liability assets? Our profits are liability side. Okay, so why just the profits are liability side? Because when you talk about companies act and let it be, again we don't need to get into that. Take that point. Okay, liabilities will maintain, retained earnings will maintain liability side. Okay, done. That is enough for us. That is enough. What items would be there? Okay, what we make out of it, that we have to understand. When you talk about balance sheet, in the balance sheet you will have all your assets one side, all your liabilities another side. Along with the liability side, you will have your retained earnings, or you can say your surplus, the profits. It could be profit or loss. Whatever you make out, that you will have a liability side. That's about balance sheet. All assets should be equal to all liabilities. When you say liabilities, so liabilities along with your retained earnings. When you talk about fund flow statements, it's all cash flow or fund flow. If you are focusing on only your core business activities, that you can treat as cash flow. If you are focusing on all the aspects of cash flow within the organization, core business activities along with that other activities which are part of your business, that you can treat as a fund. When you say fund, it's more than cash you can treat. Cash which will be just flows based on your sales and purchases. Fund means there may not be sale or purchase, but you may invest or you may take an investment into your organization, or you may take loans, or else you may give loans to other companies. Possible, right? You may invest in other companies. In that point of view, it is called as fund flow. But in small size core business point of it is called as a cash. The bigger size, bigger scope, it is called as a fund flow statement. So it's very simple, very simple. These income statement, okay, income statement or balance sheet or cash flow statement, you call as income statement, or you can call as profit and loss. Okay, profit and loss. So these statements, okay, these statements we call as financial statements. This we call as financial statement. Every company target is creating the financial statements based on whatever the data they're recording within the financials application. If any company is going to use Oracle Fusion applications, their ultimate target is they want to create these financial reports, income statement, where they need complete revenue information, which they can get from ER, and complete expense information, which they can get from AP, so that the difference, it could be positive or negative. Okay, sometimes your revenues may be 21 lakh, and expense may be 25. That time you will incur loss. Your net income will become loss, right? Or now if you look at this example, 25 lakhs revenue, 21 lakh only expense. So you are making 4 lakhs profit. Okay, 4 lakhs, I written 40,000. Okay, 4 lakhs. So 4 lakhs profit. That means in income statement, what purpose you are using to find out profit or loss. That is reason income statement, you can call it as profit and loss statement also. Okay, you can use any name, income statement or profit and loss statement. Statement, I am not writing since there is no space there. Okay, income statement or profit and loss statement. So by using income statement and profit and loss statement, what company can achieve, they can find out they are getting profit or loss. Take current month, how much expense they spend, how much revenue they could generate. They will look into that, they will understand the result of current month or last month is loss or profit. That's how they can figure out. It's a big request all the time. If you are able to understand, don't touch the drawing tools. It's a big request. Try to understand. Hope you know what you are doing. Please. 1 second, let me clear it. So that's how it is. Okay, that's how it is. So they are able to find out. If they want to find out, they have to get revenues and expense information from different applications. And if with the balance sheet, what they are trying to understand, everything is getting balanced or not. Okay, everything should get balanced. Everything should get balanced. How many assets they have, how many liabilities they have. Say 2 crore assets, 2 crore liabilities. But in between, there should be split. Liabilities may be 1.5 CR and 50 lakhs could be returned earnings, the profits. But everything need to be balanced as per balance sheet rule. So your assets should be equal to liabilities. When you say liabilities, don't think only liabilities. Liabilities side, we have our favorite figures, which we call as returned earnings, which are company profits. Okay, because company point of view, it is liable to pay. That is the reason the profits, what company you are running the company, somebody will come and invest in the company. Generally, we treat company as separate entity. Okay, the investors who are investing in the company, those are other entities. Somebody will come and invest in the company, company will make the profit. Company is liable to pay to that investors. So that is the reason why we treat the profits also as a liabilities. We'll keep liability side. It's not liability by default for company. So in terms of making profits, I mean, in terms of paying the profits to the investors who invested in the company, that is treated as a liability. Reality is not liability. Those are returned earnings, the earnings, what we earned by doing the business. Company point of view, liability. But business point of view, that is a profit. That is the reason we keep returned earnings liability side. Okay, we just keep liability side. That is the point we have to understand. Okay, otherwise it is not, it should not come liability side, but company point of view. And company point of view and business point of view. Business point of view, returned earnings are profits. Your revenue minus expense, that is a profit. The business point of view made the profit. But company point of view, company is liable to pay to the owners. We are treating companies one entity, owners are other entities, different entities. We are not seeing company and owners are same. So that is the reason this is standing liability side. That's how it is. So this is a story you have to understand. There is no big finance more than this. Okay, you go and talk to anybody, income statement, balance sheet, cash flow statement, more than that, no other expert, finance expert can talk more than this. Okay, if you are aware of this, irrespective of your background, you may be from the BTech, you may be from MCA, you may be from BSc, you may be from hotel management degree. This is what we have to understand. Once we get into the application, we'll be dealing with this data. You will be dealing with the transactions where we record the revenue. We deal with the transactions where we record the expenses. So revenue and expense, the difference only we call as net income. or you call as surplus, or you call as returned earnings, right? So when you go with the revenue, when you take these two into consideration, whatever the difference you get, that you are calling as net income, when we have this data in one place, that is called as an income statement or profit and loss statement. And if you are keeping the data like your assets, liabilities in one place, that is called as a balance sheet. As per rule, all assets should be equal to all liabilities. When you say liabilities, it is not just liabilities. So business point of view, our returned earnings, company point of view will be treated as a liability. So that is the reason when you say liabilities plus our returned earnings. From where you get this returned earnings? From here only. This 4 lakhs income statement or surplus, what we are calling, those are returned earnings. Those are the different naming conventions. Okay, you can call it as net income. Again, other story would be there, whether some amount is shared with shareholders, etc., etc. It's a remaining amount before sharing the profits. That's a different story. That you don't need to worry about it. To understand the picture, this is enough. You can call as net income, or you can call as surplus. You can call it as returned earnings. Take all as same. When you are going to get returned earnings into your balance sheet, first of all, you have to prepare your income statement. First, you prepare your income statement so that you will understand this 4 lakhs is your returned earnings or net income or surplus. That you will move to your balance sheet. Okay, that you will move to your balance sheet. So this is cash flow statement. Yes, you have to get the relevant data and you can prepare. There should be transaction in the system. Okay, you don't need to purely depend on something else. There should be data in the system, how much sales you made, right? How much cash is we got into the organization, the loans, how much we taken, and how much funding we got from outside, and how many payments we processed, or else how much amount went out from the organization. Please go on mute. Please go on mute. Only option I have to remove. Let's respect this session, please. It's not like you and me. There are many great people in the session. Okay, please. You should not become reason. I should not become reason for bad things. Okay, so investment money is flowing out because you are investing, right? It's very plain thing. No formulas, nothing. How much, with what reasons money came into organization, that you will take just as a one set in the cash flow or fund flow. How much money is going out with any reason, that you will take another set. This is how you will be able to analyze, so that you can take the better decisions. Okay, you will be able to take the better decisions, like whether what kind of shortage you have, like more money is going out, less money is coming into organization, then organization may plan to take some loans or funding, etc. Or more money is coming into organization, less money is going from out from the organization, nicely you may plan for business expansion, or you may give the loans, you may do the funding to other organizations to earn more and more. So that visibility organization will get with this fund flow statement, and with this income statement quickly, right? So quickly in every month also they can prepare, so that it's not like end of the year they will open their eyes. All the time they can open their eyes by preparing this income statement. Every month they can prepare the income statement, so that they can understand how their company performance in this month itself, so that they can take the better decision. They are not able to generate more revenue, then they will focus on the sales function, how the sales team is performing, or else they'll look into what's wrong with our product or service. They'll start focusing on that. They will try to scale up their revenue, and if their expenses are more, they will sit and they'll discuss. They'll plan for some cost effective solutions, where we are burning more expenses in the organization. They'll focus on that. They'll try to reduce the expenses, and that's how they can try to get more profit from each and every month. More revenue they can generate, less expense means definitely ultimately that is a positive net income or surplus, or you can say return earnings. When you look at your balance sheet and all that, will give very clear visibility. This is ideally like, yes, companies can release the quarterly results, but the primary focus would be yearly. So this is very, very important, where the investors or loans, when banks or financial institutions are going to give the loans to the any company, or any investors are going to invest the money into the company, definitely they look into these financial reports. They will see how much assets you have. You have only 50 cr assets, wow, you have 100 cr liabilities, we are not going to give you any loan. So not only internal, external, all the aspects, this will talk a lot. This will talk how company is powerful. If you see some companies, in the market, I don't know whether you have experience or not. If you see their assets or their capital, you can say their capital would be 100 cr or 1000 cr. Their debts would be 1500 cr. How means we don't know, they know very well. Okay, what magic logic happened, they know, right? But this is the reality in the market. Few companies, if you look into their financial reports, it shows their assets, or say their capital, the total company capital, the value is 100 cr, but their debts, okay, their loans, okay, or say their liabilities and all, 1500 cr. You know what is going to happen in that company, or what happening in that company, right? Those are different stories, we don't need to get into that. Just to give you the flavor, I'm talking about it. Okay, but ideally your asset should be more than your liabilities, right? And if you don't have debts, it's a powerful company. There are many companies in the market whose debts, whose liabilities are zero, again, the investors and all, they look into how you are making the profit. Every year your profit, you are making 10% or 12%, 13% or 14%. Generally companies don't make 50%, 100% profits. Ideally they make 10%, 11, 12, 13, 14. This is the on an average, most of the companies will make the profits, which you see outside the big names. What we know, even those companies also makes this sort of 10, 12, 13, 14%. There are many companies who makes negative profits. So that's what these financial reports are very, very essential. Okay, so for the investors, when they just want to invest and all, definitely they look into this, and again they will look into this fund flow statements also. Somehow it totally depends on what kind of investor is. Some investors, they will scan everything, not only your reports, they will scan you also, who you are running the company, who is CEO, who is the founder. Reports are not enough for them, they'll scan people also. It's a style of investors, or the financial institutions who are approaching you, or whom you are approaching. Depending on that, the stories will run. So now here is the actual point, why we are discussing all these points, since very, very important. Along with that, how this information will be useful. Now take example, I want to prepare income statement. Can I prepare income statement sitting in AP? Not possible. If I sit in the receivables, can I prepare? Not possible. I want to create the balance sheet. If I go and sit only in AP, I have only liabilities. Not possible. By sitting in AR, I cannot prepare. By sitting, I cannot sit at a time in all these applications, right? Or else I can say, not we, data cannot sit in all these applications. All these application data can sit, but it could not be available in one place. And if I want to create the cash or fund flow statement, I cannot have this data in one place. But if you want to prepare this kind of financial reports, you need powerful data. In any company, powerful data is this. They may record hell number of transactions. Why? They need these reports. If those transactions are not recorded, this data they cannot get. Ultimately, they are interested to get this data. Unfortunately, this data cannot be generated. Without recording the transaction. Since there is no option for them, they are recording. That's it. So companies are not interested to record the transactions. There is no other option. That is the reason they're recording. Ultimately, what they need, they should be in the position to prepare income statement, or call it as profit and loss statement. They want to prepare the balance sheet. They want to prepare the cash or fund flow statement. Okay. So there is another statement also. Okay. That is not considered as a financial statement, that we call as, okay, TB, trial balance. TB, trial balance. Here everything would be there. Everything complete. You take anything, revenue, expense, asset, liability, this, that, what not. Everything within your company, whatever the activities you are doing, your all the stuff, okay, your assets, your revenues, your expense, your liabilities, everything will be loaded into TB. TB means trial balance. Okay. So everything what you are doing, it would be part of it. Okay. It's internal purpose. Okay. You no need to treat it as a financial statement. Tomorrow, if somebody will ask you the question, say, what are the financial reports or statements? Never include TB. TB stands for trial balance. Trial balance. Okay. So this can be used internal purpose. It is not belongs to financial reports family. It is not related to financial reports family. Don't include TB as a part of financial statements. Income statement, balance sheet, cash or fund flow statements are treated as a financial statements or financial reports. Reports is not a right term. It's statements we call. Okay, TB is not part of financial. It's just internal. Everything will be included within that with a summary of the figures. Yep. TB, trial balance. Just make a note. So from today's session, this should be become outcome. If you know this, you are a finance guy. What finance guy can speak more than this? You may be core technical, you may be MCA, you may be BTech or MTech. You can build the tech and the finance with this information. Yeah. So that's it. There is no other big game what finance people will play. Everything will be inside of it. Okay, inside of it. You should aware what are the finance statements, in which financial statement what item would be there, right? In income statement, revenue, expense. Result we call as net income. In balance sheet, assets and liabilities. Of course, our net income will just carry forward to balance sheet liability side. And cash or fund flow statement, already we discussed cash inflows and outflows. What else you have to learn from finance? Again, when you get into the classes and all, you will understand very minute level also, since we'll be recording the transactions very granular level, very detailed level. Yep. That is the story of finance. Now, so I want to create income statement. What should I do? Now data is not available. Revenues and expense are not in one place. My revenues are in receivables, expense in AP. I cannot prepare. Now what I have to do is, from AP and AR, what are the data I have? Or a simple example. In AP, what are the expense I have? All the invoices information I will send to GL. From AR, sales invoices information I'll send to GL. Now in GL, general ledger application, the short name is GL. I will send. Okay, I will send my invoices information to GL. Here invoices talks about the expenses, what we incurred in the specific month. And from receivables, whenever I create the sales invoice, it is identification of revenue, how much revenue I'm going to get. I sold, I can expect revenue. Okay, it is not like you received money, then only it will become revenue. No. You sold, done. You are eligible. Sales invoice information is sent. Now in general ledger application, okay, I have expense which are coming from AP, revenue which is coming from receivables. Can I prepare income statement within the GL? Yes, I can prepare income statement within the GL. I no need to go around AP and AR, not required. Everything is in one place. Now, as a business, as a company, I want to prepare balance sheet. I have assets. Where I have assets? Fixed and current. Okay, fixed and current. Which has a liquidity, that is a current. Okay, means your cash in the bank and your how much amount you are going to get from your customers, your receivables. Okay. And the fixed assets means where liquidity is not that much simple. Okay. There is some other rule when you are working on fixed assets. I'll explain it. More than 1 year, this, that, etc. We'll talk about it. Okay. We'll talk those. Now, for now, nothing. Just everything treat as asset. It could be current, which has a liquidity, which doesn't have a easy liquidity. Asset you can treat as asset. So I need all the assets information into GL and all the liabilities information to GL. Then only I can create the balance sheet. Now, how to get all assets into GL? So I have to get, okay, assets. From fixed assets, I'll get assets into GL. And from bank, okay, in the bank accounts, we'll have a cash. That's a current asset we treat, but anyway, it's a current or fixed. Okay, fixed or loose asset doesn't matter, it is asset for us. Bank we will send here. And where we can have this also, like whatever customer has to pay us, that is a current asset for us. This all data will get here. So now from receivables I am getting the receivables, how much customer has to pay, which is a current asset. And from bank account balances information I'll get into GL. From fixed assets, all the asset value I'll get into GL. And can I prepare the can I prepare the balance sheet? No. Liabilities information also we require. Okay, liabilities information also required. Liabilities information will bring from here, from AP to GL. Now we have liabilities information and assets information, and other side we have net income, which is resulted within, because before balance sheet we discussed, first we'll get revenues and expense and we'll prepare the income statement. Then we will realize how much returned earnings we have. Now we are bringing assets and liabilities. Already we have net income or returned earnings within the GL only. So now we have a 3 items in the GL. Assets we have, liabilities we have, returned earnings we have, which is resulting from income statement. Now everything we have within the GL, now you can prepare income statement. Now, if you need this information, cash flow, inflows and outflows, right? So same thing, same story, right? How the money is flowing inside. You are doing the sales and all you are getting, that means receipts. You get all receipts information into GL. This is inflow. Where is outflow? You are making the payments. These are regular business. This is all from regular business. Receipts and payments regular. Apart from that, you may have some payments. Those could be not payments to your supplier. Those could be investments. You may invest somewhere. You may create some receipts. Those may not result from your regular business. That may be payment what you are receiving from financial institution or some investment company. So these you will get into this. Why can't you prepare your fund flow statement? And you are recording all this hell number of transactions across these applications. Where you are recording the transaction, the 2 applications only, payables and the receivables. Rest is a drama. Just we are maintaining our company data. That's it. That's our interest. If you don't record this data, if you don't record the data what you are recording in these 3 applications, still you can run the business. But there could be big mess, right? You don't know how much balances you have in your bank account. Still you can make the payments, right? If check is getting bounced and all, then you will wake up, right? You cannot take many decisions. Fixed assets, you have one asset here, one asset there, etc., etc. You don't know how many assets you have, etc. It's bad news. If you maintain, yes, it's systematic. Expense reports, yes, employees will be spending. Even you are not interested, they don't leave you, right? You have to reimburse. They'll force you. Anyway, you'll do it. Here is your interest. But there is big flaw if you are not maintaining. It's all internal. It's all internal. It's not related to business. Where is your business? Your business is there in the AP and AR. Your business is there in the AP and AR. But if you want to create the financial reports, your AP and AR is not enough. You need information from your bank account. You need information from your fixed assets also. You need information from expense reports, like where how much expense you are incurring, right? For reporting point of view, everything is important. The business, to perform the business activities, this is very much important. But if you have only these two, doesn't make sense. You don't know funds in your bank account, you don't know your asset. No, it doesn't make sense. That is the reason everything is important. Everything is very, very important. Very primarily, what is important means these two. Along with that, these should travel with these two applications also. So that is the reason these all applications became very important. Priority wise, these two, when you are learning, give 100% importance to each and every application. Give each and every application 100% importance, so that you can learn in a better way that will help you in all the ways, right? So this is what we have to understand. What will result from our financials application, what data we are recording. So which data will be part of which financial report? This is a one financial report. This is one financial report. This is one financial report. This is not financial report. TB, trial balance. This all the stuff will be inside of this TB. All like what is part of income statement, what is a part of your balance sheet, what is a part of your cash flow, what not, whatever you do in your company, that should go and sit in the TB. But TB is not treated as a financial statements. When you say financial statements, these are the financial statements. Hope it is very, very clear. It's a simple to understand. Simple to understand. So if you are understanding this, you are a finance consultant. Even you are not understanding this, you can become a finance consultant, because this is just second session. There is a long way to go. You will understand all how this will result, where how we will record, etc., etc. Now you don't think, please don't think how to create invoice, how to make the payment. Just you have to understand, we need to create invoice, we need to make the payment. How? Don't question yourself. Later we will question, we will get answer also. When we are working on AP, you have these two questions: how to create invoice, how to make the payment. Now just I'm trying to introduce the terminology. I'm not expecting you are learning from this session, not required. If you are not understanding anything also, not an issue, but you are able to recognize the terms in the upcoming sessions, that is enough. That is the expectation from this session. I'm not expecting any learning from this session, but my request is every session, whatever we discuss, please copy into your notebook. You should have a big notebook, not small notebook. You should not have a small notebook, big notebook. What are the big sizes available in the market? Buy it, because that much size you need it. Okay, that much size you need it. Buy big notebook and have a nice pen. Don't have a dirty pen, will become dirty. Spend some money and buy nice pen, because it will be in your hand, right? It should not be dirty pen. Okay, don't have a cheap pen, will become cheap. Have some costly 500,000, 2,000. We can buy, right, for our career. Old 1,000 rupees pen, you will get some power into body. Yeah, buy costly pen. Seriously, I'm telling, it's not fun if you are smiling or laughing. Okay, seriously, I'm telling, it works. It works. Don't buy cheap pens. One pen is available for 10 rupees. You buy only 10 rupees pen. You will become 10 rupees only. Okay, so just buy nice pen, because you are learning powerful content. It is for your career. Okay, you want to power to your career. Nice book, nice pen, not cheap book, cheap pen. Book also, you go to shop and say, ask what is the costly and the quality book you have. Buy it, because it won't cost lakhs or crores. Small investment. Nice book, nice pen. Rest you take care. I don't talk about it. Just since it's related to learning, and just suggesting or recommending or requesting. Nice book, nice pen. Okay. So you will be dealing with the book and pen when you are learning this. That should be good enough. That is the reason I am recommending. So these are the points we have to understand. My suggestion request is capture each and everything. You will be getting this spreadsheet also. In every session, I will write whatever we are discussing. I will write as much as possible. I will write it. You will get this sheet. but this sheet is not yours. This sheet is mine. I written. Okay. Book is yours. You write it. Don't depend on this sheet. If you depend on the sheet, what you learn is 50%. If you write in your book, what you learn is 100%. So you choose, you need 50% or you need 100%. If you don't write anything, if you don't follow the sheet, what you learn is 10%. That only feeling, not real learning. After that, your learning is zero. You choose which is your track. You are expecting zero track, means you will attend the classes, you will feel it, you will feel comfortable, cool. You may be happy, you are understanding everything. That's my responsibility. So I should make you to understand everything. That's 100% my responsibility. You will just, I'll do that part from my side. You will be comfortable. That will give you zero learning. 10-20% feel when you are attending. Once you complete, zero learning. If you are reading this content which is in this spreadsheet, what you get along with the class videos, it will become 50% learning. And if you are writing the notebook, each and every point, that is 100% learning. Because when you write with your hand, you are writing, it's handwriting, just what you write, it's, you will be writing with the mind, it's mind writing. It will be printed in your mind. It is printed in your mind. If you are going with approaches, spreadsheet, this, that, etc., the fancy approaches of documentation, the laptop, etc., doesn't work. Use laptop just to attend the classes. For further learning anything, use hard book. Use hard book, not soft book within your laptop. Okay, it will work, but not the greater way. Buy the big size book, hard book, okay, and nice pen as we discussed, and start your journey. It will become powerful. So these are the points which you have to understand. Hope you are clear why we are using the general ledger application to prepare the financial reports. That is the point we are driving. Okay, so what we are deriving from all these applications, we are just deriving the data and we are generating the reports in the general ledger application. The purpose of general ledger application is to prepare the financial reports. We don't record any transactions within the general ledger application. Okay, we don't record any transactions within the general ledger application. We just prepare transactions. We prepare the reports in the general ledger application and we record the transactions within these applications. Okay, these applications. So this is the point we have to understand. Okay, this is the point we have to understand when we talk about the purpose of each and every application. Okay, this clarity we should get before we go and deal with these applications. Okay, this is the clarity we have to get. I'm stopping here for today. I'm stopping here for today. So where I will talk about it. Now your turn. You can raise your questions and we'll talk about maybe this program, the points what we discussed. So let's see that. Let me just unmute if you are not able to unmute from your end. One sec. Okay, you can unmute. Yeah, I could see two hands already raised. Yes, yeah, please go ahead.
Hi Lakshman. So
No, I'm sorry, one second, don't mind. Yesterday also I clearly mentioned it's a time consuming. My name is not required, your name is not required. Direct question.
Okay.
Yeah.
So I understood these reports are from GL, but when it comes to income, net income, do companies will have tax for net income also?
Yes, those all will be calculated. See, if you have like invoice creation, there'll be, you are treating as expense. Within the tax component also would be there. Okay. Tax component would be there. Here, after all the tax calculation only, it will result. Okay, it will be resulted, right? So you'll have a 10,000 invoice, maybe 1,000 tax. Tax will pay to the government. Tax will pay to the government, right? And again, what you paid, 1 second here. What you pay to your supplier is different. What you pay to the government is different. Here, whatever you're making some profit and all you identified, you made the profit of 100 CR as a company. you have to pay corporate tax to government.
Okay. So for this corporate tax, like
Yes.
we have tax setups also.
Yeah, on your revenue, you have to do the corporate tax. For corporate tax, there is no solution in Oracle Fusion applications. Okay, this you have to do outside of the Oracle applications. Every company is doing that only. What they do is, it's not regular activity, right? Errand activity. They will see, take the total data. There are some tools outside in the market, or it's a
Okay.
spreadsheet calculation also. Many clients are doing. Yeah.
Oh,
So, but
okay.
regular business is buying and selling. There you need solution. This corporate tax, whatever the income the company is generating, on that what tax you pay to the government, the corporate taxes, reality you don't need solution. That is the reason Oracle also not giving. At year end, one time you do it, right?
Oh, yeah.
That's how it is. Yep.
Okay. And like as far as I know, there are few standard programs to get these reports in Oracle.
Don't worry, don't get into application. That when we are in the
No, no.
application, we'll
I
talk
just
about it. I'll tell you. When you are
yeah.
working on
What?
accounts payables, one second. When you are working on accounts payables, you have L number of reports to create for invoice
Yeah.
reports, payments reports. One second, I'm coming to that part. And receivables and all. In the same way, in the general ledger also you have. But you don't have reports how exactly you need. You have to prepare the reports. That also we'll see in our classes. There is one separate concept. If you are from,
Oh,
you mentioned in the last session, you are from EBS background, right?
yes.
You have FSG, right?
Yeah.
Financial statement generator.
Yes. Yes.
Similar to that, we have FRS in Fusion.
Okay.
Okay. Financial reporting studio.
Okay.
There we'll see how to prepare the reports. Apart from these, what we prepare, there are many standard reports Oracle is delivering. Yeah, see those. Yeah.
Okay. Yeah.
See, I can
That
entertain
helps.
your many questions, but it is irrelevant for many people. When we arrive, you can ask that relevant questions. Yeah, that is my request.
Oh,
Yeah.
okay.
I
Okay.
can
Got
explain, I
it.
can answer to all your questions, but other
I
people, they'll
understood.
close their ears. Yeah.
Yeah. I understood. Thank you.
Yes.
Thank you.
Yeah. Next question, please.
Hi, Lakshman.
Yeah, others, please go on mute, except who is talking. Yeah, please go ahead.
Yes, so Lakshman, so I have a couple of questions. So basically, the balance sheet. So you mentioned like the liability plus retained earning, but I think the retained earning comes from the revenue minus expense.
Correct.
So
Yes.
correct, right?
Correct. Yes. That only we discussed, right?
Yeah, yeah. But the like in the asset, like in the AR. CM and the FA is on the asset side. So both, so how come, like, do you
Yeah,
have
yeah,
any?
true. For that example, I given clear reason. That is the reason. This is a big question for everybody. Okay, this is a big question for everybody. It should become asset, right?
Yes.
Yes, right. Why it is other side? This is the point. So in business point of view, this is asset only. Business making the profit. But as per company act, as per company laws, company is one entity. Company is separate entity from the owners. The treatment is different. Okay. The treatment is different. See, you see, as a just you what you can say is you are earning the salary, right? Right? Your company point of view, that is income for you, right?
Correct.
Your family point of view, that is a liability for you. You have to pay, you have to get salary for your family every month. You are liable. Every
Okay.
month you have to give 1 lakh to your family to run the family. Are you liable?
Yes.
Family point of view, you are liable. Every month you have to get money. 1 lakh rupees you have to get. Otherwise, you cannot run the family. You are liable every month, 1 lakh. Right?
Correct.
But company point of view, that is income for you, right?
Okay.
Got the point? These are two point of views. Yeah. The same way,
Okay.
yeah, same way, finance, the company act, and all these aspects. Your company is treated as a one entity. Okay. Or your investors, the founders, who are running the company, those are other entities. Always company is liable to pay the money to investors, founders. Now this money is in the which account? Company's account, right?
Hmm.
So this company is liable to pay these profits to whom? Owners, right?
Owners, yeah,
Now for company, it's liability or not?
correct.
That's it. That's it.
Yeah, I got your point. Yes. And just to understand the like basic accounting flow, so are you going to take any session for this one?
Yes, we will. When we record the transactions, we'll see. We'll discuss debit, credit,
Okay.
how it will get knocked off. What is the final entry, right? We'll see all those.
Okay, like to get some more information about the basic accounting flow, like liabilities, equities, and
Nothing is required. I suggest you don't get into confusions and all. Attend
okay.
the classes. End of the course, still if something is, some glitch, then we'll see.
Okay. And so my second question is like you said net income, we can also say like surplus, return earning. So can we also say that like it is our profit or loss?
Yeah, you have to open and see inside how it is, positive or negative. Then it will become profit or loss. So that is a
Yeah.
very minute level. See, if I say net income, it could be profit or loss. If I say net income, net income. If I open the net income, I can see figures are in the positive or negative. If it is a positive, I'll call as profit.
Okay.
If it is a negative, I call it as loss. But it could be profit or loss. The result, the difference between revenue and expense, simply call as net income. Net income could be positive or negative. If it is a positive, profit. If it is negative, loss.
Yeah, correct. Got your point.
Yes.
And this balance sheet should always be balanced, like the
Yes, it
liability,
should be
like
balanced. It
it
should
should
be
be balanced.
balanced. That is the reason you are not taking reality, your assets and liabilities will not be balanced. Right? So there will be difference. The difference only this, your profit.
Wow. Okay.
See,
And
because see, I have assets.
sorry.
For example, let me take simple example. I have 100 CR assets. Right? 100 CR assets. I have 75 CR liabilities.
Okay.
75 CR liabilities.
Hmm.
What is my asset? What is my value in the company? Remaining value? 25, right?
25 CR, yeah.
Yeah. How we are getting because of your assets and liabilities you are taking into consideration. Yeah. So that's how. Just you should consider your assets and liabilities, and to balance it, definitely you have to include your retained earnings. Then you can see the balance in your balance sheet.
Okay. And my next,
See, if you have other specific questions, okay, you can ask Google also, it will tell you, or else ask Chat GPT. Yeah.
yeah, and you mentioned, so yeah, one more question. Like, so that the trial balance, you said that is not the financial statement family, right?
Yes.
Trial balance is trial balance.
Yes. Now, everything, every different activities, what we do, I'll tell you 1 second. We have a different type of accounts. Account types. You have assets, liabilities, expense, revenue. Okay, these are the primary 4 type of accounts. Along with that, another account is, you can say owner's equity or retained earnings. Any name you can use.
Okay.
Ownership or owner's equity, any name you can use. Ownership or owner's equity. Okay, owner's equity means what? It's the
Shares, bonds.
capital. It could be like the total profit, or in many ways you can take that. Owner's equity or ownership.
The amount
Retained
invested by the owner in the business.
Yes, retained earnings, which is belongs to the owners. That means
Mhm.
these all are same. Now we have 5 type of accounts, right? So what are the income statement items in this list? You tell me.
Sorry, can you come again?
What are the income statement items? Items means account types in this list. Income
Expense
statement
revenue.
items.
Revenue and expenses.
That's
Yeah.
it. What are the balance sheet items?
Asset and liabilities.
Asset liabilities, yeah.
And
Retained
owner's
What
earnings.
about
equity.
third one? Last one.
Oh yeah, ownership
Owner's
equity
equity.
as
Yes.
well. Yeah.
That's it. This is the language we use. When you are working in any client project, they'll say this account is balance sheet account, this account is profit and loss account. That's the language they use.
Lakshman,
One second.
so with
Let him complete. Then we'll see if anything is there. Please. You got it right?
Yeah, got your point, Lakshman.
Now the point. Your question. I'm coming to your question. You are talking about TB, right?
Hmm.
Now we are clear. The asset, liability, and ownership equity is a part of specific family. The family name is balance sheet.
Right.
Expense revenues belongs to another family, that is income statement or profit and loss.
Hmm.
Right?
Right.
Now, these all belongs to one family called as TB.
Hmm.
That is a TB. All account related balances would be available in the TB.
Right.
Yeah. So primarily you need TB. From that you can do all these games. You can play all these games.
Okay.
Yeah. That's
Yeah.
it.
Thanks, Lakshman.
Everything you will have in
Got
your TB. Okay. Keep
Hmm.
TB ready. Then you can, what you can't prepare, tell me. You can prepare everything, right?
Everything, yeah.
That's it.
Because everything is there, yeah.
Everything is there. You pull into you pull into what should belongs to which is subfamilies. Right?
Yes.
That's it. This is a TB, means is a complete consolidated your accounting information, which is classified into different account types with the balances. Yeah, that's how it is.
Yeah.
Now, I think you are done. Next question from
Thank you.
the guy who
Hey.
runs. Yeah.
Yeah, can I go next?
Yep.
Shashi. So how do you treat a depreciation? Is it like a part of a liability or treated as
No.
differently?
See, I purchase on asset. Okay, I purchase on asset. Asset value is, you take example, you purchased on car 10 lakhs. Worth is 10 lakhs. What do you call? The 10 lakhs is what for you out of this list?
It's an as
Yes, correct.
as an
Asset
asset,
only.
yeah. Yes,
Asset.
yeah.
After 1 year, you are planning to sell that car because you want to buy brand new car, other next version.
Mm-hmm.
So when you are selling that, you are able to sell that car. The original cost of the car worth is 10 lakhs. Now you are able to sell after 1 year 8 lakhs only.
Mm.
So how much you lost the value?
2 lakhs, yeah.
What you lost the 2 lakhs value, that we call as depreciation.
Right.
Now tell me, that is becoming asset for you or liability for you or expense for you or revenue for you or profit for you?
Bharat later, huh?
No, please go on mute. This is a big request. We don't want to record all these entertainments in the recordings classes, please. I'm clearly telling, only option is I will remove. Even after making payment also, I'll do that only. We have to follow this discipline. That's a big request. Yeah, you will forget and you'll start talking or you playing music, means it doesn't work here in these classes. Yeah, now I'm asking this question.
Yeah.
Okay, now what it will become? The 2 lakhs you treat as what in this list?
It's
Think
an
and tell.
expense.
No need to answer. Don't pick randomly one from this list. Think and answer, because we are consultants. We are going to become a consultants. We should not become
Should
random.
I answer?
No, others are not. Okay. The guy who asked,
Okay.
the guy can answer.
Yeah,
think
Shashi
and tell.
decide, yeah.
Because car is yours, not mine.
Yeah, it's a loss for me, right? I mean, 2 lakhs is a loss for me, right?
Yes. You went to a restaurant, you spent some money. That is also loss for you, right?
Yeah, I mean it's outflowing.
No,
But in
whatever it
return,
may
I'm
be. No,
getting.
don't go deeper and deeper. Just
Okay.
let's be high level.
Yeah,
Class only,
it's
right?
yeah, correct. Yeah,
That you are calling as what?
expense,
Here, what you call? The 2 lakhs.
expense.
That's it.
Yeah. Okay. Okay.
So what you are losing the 2 lakhs, we call as depreciation. It's not appreciated, right? It's not increased, it's decreased. So depreciation.
Got it. Got
Depreciation
it.
is expense.
Expense. Okay.
You know where it will come in these reports.
Yes. Yes.
That's it.
Got it. Thanks, Lakshman.
Yep. Right. Next question, please.
Okay. So I have one question regarding the next classes. So in our course, will we ever use any coding capabilities that we need to have any coding capabilities, or we don't need to use any coding?
Not required, but I'll take one class on SQL. SQL, structure query language, sometimes, rarely, in a month, one time, if not month, in a quarter, one time, you may spend 5-10 minutes time in your work environment. Such kind of task you may have. So just matter of 30 minutes we'll spend. We will understand that. That is enough. No coding. Overall, I can say no coding.
Okay. And also, will you teach us, like, I'm not sure whether we'll have like the deployments like in other places where you deploy the code, right, from one environment to another environment. I'm not sure whether the financial consultants would be required to do that, or is it like the coding, the deployment team would be taking care of that? How does it work?
Yeah. Here, when you talk about deployment, 2 points we have. One is setup deployments. The second one is code deployments. Code deployments are always done by technical team because you are not the owner to the code. You don't know anything about it. So technical consultant will do the code deployments, etc. One environment to other environment, or else in the same environment in another passion, etc., etc. When we talk about ourselves, finance functional consultant, we are functional, not technical. So we do configuration deployments, setup deployments that we will learn in our classes.
Okay, so you will teach us.
What is ours, we will get into our bucket, no doubt.
Okay, thank you.
Thanks. Next question, please.
Lakshman, I'm not from this background, so just wanna know, like, as a Oracle financial consultant, will the organizations will be okay dealing with the financial matters that they do, like expense, revenue? Will they share with us, or we only do like the initial setups for like the financial people to take care of? Whatever you are
See,
talking, right? Like the liability assets, will the organization be okay knowing these matters for a consultant?
yes, they'll give entire system access to you, but they won't ask you to do all these things. They will do it. You have to tell them how to do it. That's it. They will be doing. You don't need to do anything. Here we discussed a few points, right? One second.
Okay. Yeah.
These all are not your task. They will do it. How they can create invoice and how they can make the payment. As a consultant, will tell them, hey, this is how you can create invoice in the AP. This is how you can make the payment in the AP. That's it. They'll do on the daily basis.
Okay.
Same. If you want to tell them, you have to learn it, right?
Yeah.
That's what we are doing. So what we are learning here, it's not for us. Everything is not for us. Okay.
Okay, but we will know what is
60% for
coming.
others, 40% for us. We'll come to know all those.
Okay, so we will know what like organization, what is the inflow and outflow of the organization, right?
Yes,
Even
we
we
will sit and
consulted.
discuss. We will sit and
Oh,
discuss.
okay.
We'll be spending a lot of time when you are in the project. The project duration could be 1 year, 2 year, 3 years, depending on the client size, or else 8, 9, 10 months. You will have enough time.
Okay.
It's not like one day like our session as we are discussing.
Yeah.
Okay.
Okay, got
Takes
it.
too much time. You'll be spending. You can sit with them. You can ask hell number of questions. Ask any question. They have to answer because you are going to help them. You have to understand about the business, what they are doing, what systems they are using, because you are going to help them to use Oracle Fusion applications, right?
Got it.
You
Yeah.
will have all the powers, right? You can deal with them. You know Oracle Fusion application, so you have all the rights to ask and get the information from the client. We'll discuss those again.
Yeah,
Those
got
more detail level explained in the real-time classes also.
it. Sure. Thank you.
Yeah.
Hello?
Next question, please.
Hello? Hello?
If somebody is speaking,
Yes.
it's not audible.
Sorry about that.
Can you increase the volume?
Um,
25% volume we are getting. Meantime, I'll proceed with somebody else. Please look into the setup. Meantime. Yeah. Any other questions from anyone?
Hey, hi. I have some basic question about general entries. So during the session, you mentioned that so we are not going to enter any transaction directly in a GL. But what about a general entry?
Yes. Reality we don't do. If you want to pass, because you are creating invoice where you have to create AP. You are creating payment where you have to create payables itself, AP itself. But in the business, if they want to pass some adjustment entries, then there is a provision. There is an option directly also you can record in the GL, but those are temporary purpose. Okay. The process, everything need to be followed. If you are recording invoice in the AP, supplier would be there. In the GL, supplier will not be there. If you are recording the sales invoice in the receivables, customer would be there. To which customer you are sending? In GL, you will not have any customer. If you are creating the asset in the fixed assets, you can maintain complete information. That is not possible in the general ledger application. If you are recording the expense report in the expense management, you can gather the complete information, what details required for expense report. It is not possible in the GL. In the GL, you can put the summary of the certain figures with the certain accounts, not complete information. So GL is not designed to create the transaction. GL is designed to prepare the financial reports by collecting the data from all other applications. And still Oracle is allowing you to record some transactions in the GL, but not equivalent to your invoice, payment, bill, receipt, etc., etc. Those we call as journal, simple entry. Mostly businesses will use temporary purpose or adjustment purpose. We'll understand later. We'll understand. We will create that also. We don't leave anything.
Okay, thank you.
Yep. Next question, please.
Hi Lakshman, will we be covering the BIP concept here as part of this training?
Can you repeat the point?
BIP concept, BIP?
Oh, BIP reports. It's a technical.
Right.
Okay, see,
Yes.
BIP, Business Intelligence Publisher. Okay, BIP reports is not our task, but I'll just take you through to understand how SQL report, how SQL query we can write. Based on that, how you can fetch the result as a BIP report. That I'll walk through in one session. But
Got
as a
it.
finance functional consultant, that is not our task. Technical people will do that, the BIP reports.
But sometimes if you want to execute any basic queries and get any
That I will
transaction
take.
related
That's what I'm mentioning. The
information.
basic queries how to write in the BI environment, BIP environment, how to navigate, how to go to that environment area, how to create the SQL queries, how you take the outcome into report, right? This I will cover. I will take one session on that.
Okay. Will we be covering the concurrent program related details also, like the
Yeah,
standard
we'll be
concurrent
running many
program?
concurrent programs, and we don't create any concurrent programs. That is not our task. Okay, but we'll be working on the concurrent, many concurrent programs will be submitting, will be understanding how that synchronization takes place, LDAP, etc. we call. That we will discuss.
Got it. How about the integration related setups? Will we be going through any of that?
Yeah, from finance side, being a finance consultant, if any integration, what we have to do within the system environment, that I will definitely, I'll talk about it, and I'll throw some light on to make you to understand what kind of point of view you should have when there is integration.
Yeah, integration, like for example, a tax integration, there we will have to do many kind of setups, right? If we have to integrate with a third party tax
No, that's
engine.
what that same point I'm mentioning. From our finance point of view, if there is one X application integration with the GL or AP or any other application, From finance application side, being a finance functional consultant, what we should look after, what we should aware, right? What setups we have to do in the system, that I'll talk about it.
Okay, Lakshman. Thank you.
Yeah, thanks. Next question.
Yeah, hi Lakshman.
Yeah.
Yeah, so my question is that
Can you increase
like,
the volume if possible?
yeah, can you hear me now?
Same, no change. Let's proceed.
Yeah, so my question is that when we will be discussing the different modules, like will you also tell us the various issues that arise from an customer point of view, that like when as a consultant when we try to
You will
implement
understand those, you will understand more detail level. In fact, you also will get issues.
Okay.
That we will, yeah, when we are going through here and there, many things you'll be doing. Yes, I'll touch base. If you don't do this, this will happen. If you are facing this kind of things, this is what you have to verify. This is how you have to think through.
Yeah, right.
We'll
The
discuss.
troubleshooting part or something like that. Yeah.
Correct. Yeah. That
Okay.
understanding we will get, no doubt in that.
Okay, thank you so much.
Yeah, thanks. Next question. Any questions? I think there was some question from somebody due to some audio, some issue. We could not take it.
Yeah,
Can you try
I'm
again?
trying to. Yeah, I will resolve it, but I will resolve it in the next class. Okay.
Yeah, please go ahead. Yeah.
Yeah, I just want to ask a quick question, if you can hear me. I just want to find out if the cash flow management, the information will be obtained from the general ledger.
Cash management.
Yes, if that information is going to be pulled from the general ledger.
Yes. See here, we discussed, right? See, what we have inside of this cash management, bank accounts, we'll have a balances, right?
Yeah.
That information flows to general ledger application. Apart from that, we perform few other transactions which are related to your bank accounts also. Say,
okay,
right? That information also will come.
Got it.
Yeah.
Thank you.
Yeah, thank you. Next question, please.
So the most probably the requirements we'll be getting from these modules when we are searching for the jobs for most of these modules, or it would be
It's not like mostly we get requirement on these modules. Companies will not have any kind of requirements when they are hiring the people by targeting specific applications. They will hire the people based on the product family. These all we call as finance related applications. This we call as financials product family. As per the technical term, what Oracle given is financials offering. Oracle is offering these applications as a part of finance. So if there is any requirement, they will look for the consultant who is strong in all these applications. If you say you are specialized in APR, they don't like your profile. The reason is when company is hiring you, they are not hiring only one project, right?
Okay.
You should be a very powerful resource. Today in one project, tomorrow other project. You should be able to handle any module, or if required, all the modules, or only two modules, one pair or two pairs of the modules. So you should be very much diversified in these applications. That's the reason when companies hiring, they are not searching for where is AP expert, AR expert. No, where is finance expert.
Right. So in addition to these modules, will they ask any other things or
not required? You can say no. 100% okay.
Got it. Thank you.
Yeah. Even you have a 10 years of experience, if they ask, if you claim Oracle Fusion Finance Consultant, if you claim these applications, apart from that, if they are asking, you have a 10 years experience on Oracle Finance, if they ask something else, clearly you can say, I never worked on it. Yes, it makes sense. That's reality.
Okay. Sure. Thank you.
Yeah. But it should not be like that. You say you have 5 years of experience on finance, you will say, I don't know fixed assets. You cannot create assets if you answer like that.
Got it.
Yes. Next question, please.
As a fusion consultant, when we are working in client location, so work with end users and other people, so they are asking some questions and so how we are teaching, so how we are prepared.
Those all you will learn. Those all you will learn as a part of that 15 hours real-time videos. What are the different sessions we conduct? Those only we call as ERPs, UATs, end user trainings. There you will learn. There you will learn. So what you are learning, this only you will be helping them, because you will be learning end to end. In front of you, they will become 10%.
Okay.
So who need 10%, who has kind of 100% equivalent information, they can give 10%. So you'll be conducting CRPs, confidence room pilot, where you will just help them how that application works. You'll conduct the UAT, user accept test. You'll ask the business users to test the application, how they are finding the application. And you'll provide some training to the business users, how they can create invoice, how they can make the payment, which is a very simple task for us. And also we prepare a few documents, which we call as end user documents. That's how you help them, which is pretty much simple. After learning at this stage, you will feel it as difficult. Once you complete this program, yes, that is nothing for you.
Thank you.
Lakshman, as
One
part
second,
of
one second. Let him complete.
Sure.
Let me get a confirmation from him, then we'll see. Got it?
Yeah, thank you, Lakshman. Thank you so much.
Thanks. Yeah, let's see next
Yeah.
question.
Yeah. So my question was, in this process, will we also learn how to prepare the cutover sheets and everything? Just a curiosity.
Oh,
Because not,
cutover
yeah.
sheets again, it's a big story, data migration related. You will be learning the templates, how to get the data, how to load the data, how to get into the system, the complete process. So when you talk about data migration, data conversion, cutover strategy and all, it's a far advanced and all the big stories. Those you will find in this.
Okay.
But if you want to ask, if you ask me to talk a little bit, yes, I can throw some light on it, which is more than what we planned. That's it.
So this leads to my next question, Lakshman. So, I mean, many of us, because of the geographical constraint or, personal constraint, if you're not able to attend the program too, though we are definitely eager to and want to, but if there are some constraints, can we also get some perk out of it, in case, if there is a possibility, though we are not able to be in person to attend those sessions, though?
Yeah, talk to our teams. That's what. Talk to our team. We'll see if there is any feasibility.
Sure, no, sure.
Yeah.
Thank you so much for this.
Yeah, yeah. Next question, please.
So this Lakshman, this tax, Oracle tax is